Cool. So I think we can get started. So thank you all for coming today to our event with Mr. Wehmer, who's the CEO of Wintrust. So we certainly have a lot to learn from him today about how the company started, how it's doing now, also just about his journey as founding Wintrust and now as CEO. I think we have a great event today. So if you could just introduce yourself in the chat with your name, grade, and school, that would be great. And why you are interested in attending. If you also want to include your city, that would be good as well. So I'm Lizzie Brand. I'm president of the Junior Economic Club of Chicago. So I'm happy to have you all here today. We have members from Austin, Chicago, and New York, and perhaps some other cities as well. So it's great to see everyone. If you're, so we can just have a quick overview of JEC. So it was founded in 2014 and is an entirely student-run nonprofit. And we introduce high school students to business and economics through weekly member engagement events like this, quarterly economic forums, and ongoing community initiatives. So recently we've been working with Chicago Public Schools and the Council for Economic Education to in economics. So we have over 130 members from over 30 schools across Chicago, as well as chapters in 8 other cities across 4 countries. So if you're interested in learning more, you can visit our website at junioreconomicclub.org. And we look forward to the event today. So just a quick note on the next slide, we will have a post-event member discussion. So if you'd like to stay after, just chat Cole Francis to let him know. And you'll get to meet other members and discuss your thoughts on the event. So without further ado, I'll pass it off to Leo.
Yeah, thank you, Lizzie. So just if you have any questions throughout the event, please privately chat them and indicate whether you'd like them to be asked live or anonymously. It really helps to make events like these really engaging. And then just to introduce our speaker today, Ed Wehmer. So Ed Wehmer, along with some friends, started Wintrust over a card table with some beers and cigars. And the idea was to open a bank that would be an alternative to the big banks. And that became reality in 1991 when the first Wintrust Community Bank location, Lake Forest Bank and Trust, was founded. And so since May 1998, Mr. Wehmer has served as president and CEO of Wintrust. And though he's passed the title of president on, he continues as CEO and remains involved with the company's day-to-day operations and strategic initiatives. Prior to his current role, Mr. Wehmer served as Wintrust president and chief operating officer since the company's formation in 1996, and as president of Lake Forest Bank and Trust before that. Mr. Wehmer is committed to being personally involved with many aspects of the company's operations, which is why he serves as an advisory director of Wintrust's main operating subsidiaries. He is also the only board member who is also a manager of the company and is able to provide his valuable insight into management and operations as well as historic context. And then, so Mr. Wehmer is also a certified public accountant, and earlier in his career spent 7 years with Ernst & Young, specializing in the banking field in the area of bank mergers and acquisitions. And that background has helped him oversee Wintrust as it has grown into a company with more than 175 community bank locations and a number of specialized groups and divisions offering specific financial services. Outside of Wintrust, Mr. Wehmer serves on the board of Stepan Company, a chemical manufacturing and distribution company, a director of the Catholic Extension Society, chair of Northwestern Memorial Hospital Foundation, and the audit committee of Northwestern Memorial Healthcare, as a trustee for the Anne and Robert H. Lurie Children's Hospital and Foundation, and vice chairman of the finance board of the Archdiocese of Chicago. So without further ado, I'll pass off to you, Mr. Wehmer. Let me
Thanks, Leo. Good morning, everybody. Thanks for having me here. When Leo first contacted me, I thought, what a cool outfit this is. I'd never heard of it, but would have been kind of nice to have this when I was younger, and wouldn't have had to make the trip from book world to real world. Probably would have made life a little bit easier if I had done it. Had something like your organization to lean back on. Business had always been of interest to me. I was telling the people earlier that my background, I grew up in Chicago, went to grade school, Catholic grade school, then Loyola Academy, and then went off to college at Georgetown. How we got there was a little bit different. You guys have to do it today. 6 of us got in a Volkswagen bus after we lost the state read in the Catholic League Championship in 1971, and went and looked at colleges, and times were different back then. I applied to 2 schools only, no essays, just filled it out and got into both. And one was McGill in Montreal, and the other one was Georgetown. It was my backup business. And right about a month before we had been up in McGill, I love McGill. Montreal was awesome. I was gonna be a doctor, imagine that. And I got a note saying they didn't have any room for me on campus. My parents said, "You have to go to a strange company by yourself and living off campus." So I ended up saving the medical profession, going to Georgetown, and I said, my dad goes, is a good dad would do. He goes, "What are you going to do when you get older? I mean, what do you want to do?" And I said, "I don't know, big dumb dog at that age, hanging upside down on the couch." I said, "Business." He goes, "What kind of business?" "I don't know, business." He goes, "Get your CPA, get your kind degree, your CPA, because you get paid to go around and ask a bunch of questions to your clients and find out what you really like." And I said, "Well, that's a good idea." So I played a little rugby and football in college, and then moved on and got majored in accounting. I found a loophole. A friend of mine and I found a loophole where I could get 2 degrees for the price of one if I took 8 more courses. Went and saw the dean. He said, "Yeah, you can do that. You're the only 2 guys ever could." So ended up with a degree in accounting, degree in finance from Georgetown. Got my CPA, went to work for Ernst & Ernst. My dad was right. He went around, I was in distribution companies, manufacturing companies, insurance companies, banking companies. I really acclimated to banking. I thought banking was awesome. So ended up, I spent some time up, in the audit staff and up in the tax department. And you really, it is real. Going from the book world to the real world it really is important. It is important, but it's hard to get there. Because what you learn in the books isn't really practical in real life. You got to tie the strings together. And being in the business I was in accounting, maybe let you do that quickly. So I graduated the bank, went a year in the tax staff, and then was thinking of leaving. In public accounting, people don't last that long. And I had a partner, a mentor, come and say, "Ed, all the, Illinois never allowed bank mergers before. There were single bank holding companies. Couldn't have bank branches up until a long time ago. Really a relatively short time ago, I should say. And so banks started merging when they changed the laws, and nobody knew how to do it. So I had a mentor take me aside and say, "Go figure out how to merge banks." And the days you had purchase and pooling, and you had taxable and non-taxable, so a lot more complicated than it is today. And it was right when PCs, believe it or not, were coming out. And I broke into the other guys who had PCs were up in the consulting area, and they had discs that were this big, or the size of LPs. And broke in and figured out how to use VisiCalc and started modeling this stuff, and it worked out pretty well. And next thing you know, I stayed all night, went home, showered, came back in, showed my mentor. He goes, "You're on a plane tomorrow night to Pittsburgh, where Pittsburgh National PNC was buying Provident." And I'm 28 years old or something. I go up and the plane's late. I don't know if the discs are going to make it through I knew nothing about computers. I'm going to put it in, turn it on, hope it worked. I didn't know they're going to get smushed by the X-ray machine or anything. So I show up, I'm late. I go into this big room with big ceilings and all the dead guys with beards on in the corners. And they said, "You're late." I said, "Yes, sir, I'm sorry." And I ended up showing them how to do the deal. I was flying around the country doing the deal for everybody. I ran it. I ran the bank acquisition area for Ernst, which was a lot of fun. Got a little old at the time. I never really wanted to be a partner. They say you can be a partner in a year or so. I never wanted to stay in the industry. I always want to do something else on my own. So I ended up going to work for a client. We was their CFO, public company. We really learned that side of the business. Bought a couple of banks. We were there, helped to do that. Was there for 2 years. I went to another client where we went. It was a $200 million bank, not very big. I was president of the biggest bank that we bought. We bought a $500 million bank at the time called Lincoln National. From Lincoln, Irving, and Damon. They just in Chicago know that corner, North Center area, and became the CFO and president of the biggest bank. So I had to run a bank. Spent 7 years there. Then figured out there's no more banks left to buy. So all the community banks had been bought up by the bigger banks. I did a little research and found that 50% of the people still want that high touch banking experience. So I quit my job and raised $6.5 million and opened a bank, 1,100 square feet, 1991, Lake Forest Bank and Trust Company, 11 employees. Scared out of my mind, it wasn't going to work. I mean, we had nothing. We showed up. I had to call my wife to bring a phone over, a card table, and the phone was one of those old ones, looked like a brick, with the battery was big suitcase, and it only worked in a fountain in the middle of Lake Forest. So, but it went really well, and that worked well. So I got some guys. We did it again at Hinsdale in 1993. And then in 1994 we did Wilmette. 1995 we did Libertyville. In 1996 we were looking at they're doing Barrington in Chicago, and each bank did better than the next one. But they're all unit banks because we're trying to hold that position as a local alternative to the big banks. So we don't even know we're big. But I ran out of people, friends and neighbors and family to raise money from it. I was raising capital all the time. Breakfast, lunch, and dinner, 2 breakfasts, 2 lunches, 2 dinners. And because you were growing so fast, you weren't going to make any money. You had to have capital from someplace to support your growth. So we basically merged them all into one holding company. When we went into the business, we'd say, okay, we don't even know where we're going. So we would go, make up a name for the pre-acquisition, the pre-opening company. So in a book of English companies, we throw darts at. We came up Wintrust, Smithdown, we had a bunch of these goofy names of English companies that we flip over to Hinsdale Bank and Trust or Lake Forest Bank and Trust or whatever. And what happened was we merged all of the banks under the one that was called Wintrust. And we use that as the pre-opening name. It was a Wilmette Bank. And we said, how'd you go with the name Wintrust? I said, well, we threw a dart at a book. That's how we got the name, and it stuck. So it just goes to show you have a brand. You can call it XYZ company, but you make the brand by what you do and how you deliver. It's not, you can call it whatever you want. We have people come in later and I said, well, we should probably change the name or think about it. They came with all this funky stuff. I go, Wintrust is fine. It's what you do, build your brand. So we became public by virtue of the number of shareholders we had in 1996. I would have picked a better ticker symbol than WTFC, if you follow my drift there, than we have now. But it's stuck and it's ours and we're sticking with it. Since 96, we haven't turned back. We've grown almost 50 billion in assets now. I want to take you through a little presentation to show you how we've grown and how we've gone. So next slide, please. I always have to say these things because we're a public company and basically says don't believe anything I tell you, read the 10K and 10Q and all that. So we told you about the story. Community banks, 50% of people still want that high-tech bank, and that's what we do. We can open your accounts online if you want to play that game and do that and get all the benefits of it. But you can also, a lot of people like to go into the bank. Everybody says money's a commodity. Well, it is, but it's not like bread. Your money's important to you. I would rather have somebody to know what I got if I need some help. What happens is we have #1 market share in the towns we're in, 1 or 2, both in people in deposits and in rooftops, from people from age 0 to about 19 or 20. then they go to a big bank, and then they seem to come back from, when families are formed, and now later than usual, now about 29 or 30 years old is when the families are being formed. They come back when they need something. We've got to fill that in now, and I think we've done it now with the free ATMs we offer and what have you, and the free accounts to bring, we're making more headway in keeping those people and not turning more to the big bad Chases and BMOs of the world. But we've always been able to tie in the high tech and high touch on the service side. You can see that our earnings have been okay. Last year was a goofy year because of the pandemic, but we had this new accounting regulation called CECL. CECL, it's about the 18th time they tried to tell you how to compute your loan loss reserve. So you can't play. And now it's so formulaic. It's based off of a Moody's approach. But Moody's says the world's going to be, then you have to apply it to all these models that are verified and work it out. I mean, we had to take a huge provision last year. We're trying to reverse right now because credit actually ended up better than it was the year before, even through the pandemic, because of the way the government responded. First time I could say the government ever responded well on one of these things. But anyhow, you can see our history there. We got through the Great Recession of 2008. We kind of saw it coming. When you set up your own company, you've got the ability to set it up the way you want to do it, based upon your own morals and culture, your morals and values, and what you believe in the industry. And my personal belief is that the industry, banking really has, the risks of banking have not changed since the Medici's opened the first modern bank in Venice, thousands of years ago. You have reputational risk, you've got credit risk, you've got liquidity risk, you got government risk, etc. And so we play it by the rule. We play, I'm a rule follower and I set the rules. So we have our profitability model, we have our asset liability model, we have our loan policies. We don't change it for anything. And evident case in point was that back in 2006, we went into what I call rope-a-dope because you couldn't make good loans and get paid for them. Too many exceptions to policy in terms of terms and conditions, too many exceptions to policy in terms of profitability. So we stopped. We went into rope-a-dope. I called it rope-a-dope was Muhammad Ali when he fought George Foreman. Went in the corner, and he knew Foreman was bigger and stronger. So went like this, let him beat him up. Came out and ended up winning the fight. That's what we did. For 2 years, we went into what I call rope-a-dope. We used that time to, for the first number of years, even when Wintrust existed, we never wanted anybody to know Wintrust existed. So we never really advertised together. Each bank did their own, Barrington did their own, Lake Forest did their own, et cetera. But we used that 2-year period to say, we're going to be a big bank. We got to play in a different ball game. So we use it to get all of our plumbing in place so we could go out and start selling to the middle market in the bigger deals, in the bigger companies and deals. So lo and behold, I got laughed at because Wehmer says the sky is falling and this and that. Because we stopped, we shrunk, we raised capital, we hunkered down and waited. I'd seen the movie before because I knew it was going to end. Sure enough, fourth quarter of 2008, it hit the fan. We put pedal to the metal. We ended up buying more failed banks than anybody in the country. We bought a couple other businesses where we got basically paid to take them over. We had record years during the downturn because we stuck to our knitting and stuck to our guns. Now we're back in in 2008. We came out of that in 2009, 10, 11. We've grown to close to 50 billion in assets now, as I said. This last year was an interesting year in terms of the having to flip the switch, everybody go offline or work from home. 5,200 people working from home, one working in the office one day, from home the next day. It was not easy to accomplish, but handed to our people, they did a wonderful job. And then we ended up with the PPP loans we heard a lot about. We were able to, when we were about 25 billion in assets, regulators said, you got to beef up. And just the thing you want to hear when you're scrounging by at low rates. Low rates are not good for banks because their margin gets really squeezed. And they made us, they said, we want you to upgrade your technology and area. And up hiring 200 people for technology. Thank God we did, because we were able to stand up our PPP system right away. We were one of the only banks to open both first nights it was open. They've been open, and it held up. We did close to over $3 billion on the on round one, and some slides that I can show you later. But it was a great deal for us, a great deal for the country. The regulators laid off on TDRs, controlled debt restructurings, and we got through it. But other than that, we're a very diverse bank. We started it. We said, okay, when you get to start something from scratch, you get to do it on your own. So you get to start. First thing you do is make the culture. Our culture is based on a little rhyme I made up. It's for overridden, of course, by leave your ego at the door. Egos ruin businesses. They ruin relationships. You're the smartest guy in the world. What are you doing working for us? That's what I always say. Secondly, a little rhyme I came up with was for our culture. It's take the blame, share the fame, avoid the shame, and enjoy the game. Take the blame means be responsible, be accountable. Don't go looking and say, oh, somebody else's problem. Sure, everything's your problem. Somebody falls down, everybody's supposed to say, ouch. That's a team. I think you abdicate your position as a leader if you start thinking about yourself over your team. I think it's kind of a military thing, but it's really true. To be a leader, you can't worry about yourself, you worry about everybody else. That's leaving your ego at the door and the like, and taking the blame for everything, taking responsibility and accountability. You don't see a lot of that going around these days, but it's really what you have to do. Second is share the fame. Push everything down to the people who did the work. They feel much better about it. It's not about you again. It's got to be about the people who are working with you, part of your team. Make sure they get all the credit. Number three is avoid the shame. So many times you're faced with opportunities that seem to be opportunities that are a little bit on the shady side. You got to ask yourself, should I do this or not do this? Is this a shortcut? Is this right or wrong? You got to do the right thing all the time. You have one reputation. Don't blow it. Don't blow it on something stupid. It's too hard to get back, especially in these days with social media and the like. So avoid the shame is there's the 4 M's. If it passes this test, you're probably okay in doing it. So first is, what would the media think? Second is, what would your mentor think? Everybody has a mentor out there. What do you think if you did it? Third is, what would your mother think? And fourth is, what would your maker think? You make all 4 of those, you'll be okay. If it passes those tests, you're probably doing the right thing. And finally, the last was enjoy the game. You have a great work-life balance. I mean, doesn't seem like it now, but when you look back when you get to be my age and go, man, where'd the time go? You hear that all the time. I'll tell you, it's true though. So you gotta have a great work-life balance. The reason I started Wintrust in Lake Forest, I was living in Lake Forest. One of the main reasons was for quality of life. I was working 12 hours a day, 13 hours a day, never saw my kids. This was a way I coached. I was 5 minutes from where they went to school, 10 minutes from my house. I coached them and everything. I'd spend time with them and everything. It was a real blessing to be able to work there and, have no commute basically, and be able to be part of their lives. So it's really important that you do that and get a real good balance going. That's what we base our that's our culture. That and giving back. We if you look us up, we probably have the highest CRA ratings of all of our. We run a multi-chartered system, which isn't done often. Most banks have one charter and they have one brand, and we sell multiple brands just because it's important to keep that local alternative to the big bank approach and keep that community bank approach. But what sub-brand was Wintrust Banks, they're all tied in together. With that, let's move to the next slide. It's got our history there. You can look at it later if you want. Kind of busy slide. A little bit about us. If you take our provision out from last year, that CECL provision, we had a record year of $604 million of pre-tax, pre-provision earnings, $32.1 billion in loans, tangible book value. We run the bank based on 3 basic principles. I hate dilution. You'll see banks will buy banks sometimes. And I look at the banking industry, there's 2 different types. There's the mono bank and there's us who sell multiple brands and what have you. We're different than them because you could be a $30 billion bank and be a mono brand and you won't grow like us because, you know, if I want a big bank, I'll just go to a big bank. You're not even a big bank. Hard to come up with your own identity and make yourself something good. So what they do is my competitors will go buy a bank, overpay, and dilute the crap out of themselves. So they'll give up, to make 40 cents worth of earnings, they'll give up $5 worth of book value. That's 10-year payback. That's crazy. We don't do that. We run based on asset growth. We get paid based on asset growth, earnings growth, and tangible book value growth. So you can't take it out on your shareholders, make an extra 50 cents on the earnings side. You have to grow earnings and tangible book value by good profitable asset growth. Assets of $45.1 billion. We went over 46 last quarter. Diluted EPS was a decrease because of that provision that we had to take. That provision is being reversed as we speak. Hard to believe that we got through this as credit being better than it was at the beginning of the cycle. It's better now than it was, but unfortunately, Moody's didn't think so. We run our models based on Moody's scenario, which said the world was coming to an end. So we had to take huge provisions last year. They're being reversed right now. So profitability has been great. What's really nice is we won a number of awards. Greenwich Awards are national awards based on how you present, how you deliver your services to the companies. We won 7 awards. A number were national. That's a big deal for us. Going from 1 employee me to 5,200 employees, and every other year we seem to win the JD Power Award. But we win it, we lose it. We win it, we lose it. But anyhow, next slide, please. Next slide. A little bit busy, but you can see our total asset growth. We've outgrown the peers, 381 to 136. Our peer group is our proxy peer group, which is, you know, it's not hand-picked. It's one that's in our proxy. Tangible book value growth, we've gone 108%. Everybody else 101. Earnings per share growth 109 versus everybody else 47%. Our stock is accordingly. So, you know, you stick to basics, and as soon as you start thinking you're smarter in the market, you're gonna get your butt handed to you. So we don't. We're old time guys. We live by what we are, and we go from there. Next slide, please. We have a number of economic hedges. So internal hedges. So we obviously use hedging in terms of floors and swaps and caps as all we can. I try always to maintain a very positive gap balance sheet. Gap is your interest rate sensitivity, which means if rates go up, you'll make more money. If rates go down, you make less money on your net interest margin. Banks make money on their margin. We take interest income out. We pay expenses. Then you have your interest expense. You have your net interest margin. Then you take away your loan loss provision to get your operating income, and then you've got all your salaries, occupancy, and other expenses of other income, including trust income, service charges and deposits, whatever. So that's what makes up a bank earnings statement. But the internal economic hedge, as rates go down, you know, we've got a huge mortgage department. We're national. Some of our businesses are national, I should say. We started this, I had learned from all the deals I'd done in the past that a good bank could lend itself up to 2/3 of its capacity, put loans on the books up to 2/3 of its capacity in its core business. And when they get into trouble, they went with the other third. They'd fill it up with stuff they didn't know what they're doing. So we said was, all right, we're gonna have these earning asset factories out here. And although all of our deposits in our prime locations are in Chicago, we have businesses that are national and international. For a third of that portfolio that comes in, it's like an asset factory. We got a very large mortgage area, a staff that operations all over the country. It's all 50 states, and carried us through this year very well. We have a insurance premium finance company, so you've never heard of. There's 2 divisions there. There's a life insurance division, and there's a property and casualty division. That's about $12 billion in assets that turn over very quickly. And on the life side, we bought that from AIG in the back in the rope-a-dope days. I bought $8 billion worth of assets for $800 million. We've never had a loss in the business. Not one loss in the portfolio, knock on wood. The other is the P&C business, which is about the same size. That's also about $7 billion. but that's $40,000 average ticket size and turnover every 9 months. So to keep that, we have to do a lot of business to keep that going, like $10-12 billion to that business to keep that going. But losses are very shy also. The leasing company, it's about $2 billion. And so if you look at all, about a third of the portfolio comes from our niches. They're national and international based. Premium finance, we're in Canada also. And that helps keep the pressure off the guys, the other lenders trying to do traditional lending. They don't feel the pressure to have to go and try to do deals because we can always fill up with these. So as rates went down, our mortgage business did really, really well for us. And as you can see, a record year. And our net overhead ratio went down just about as much as our margin did. But if we could, why don't we just move to let's go through these slides real quick, so I don't have questions. Our loan portfolio, you can see, is grows about 12% a year, which is different than our peer group. We've been able to premium finance is one. We can, because of how diverse we are, we can pick and choose where we want to go, do mini rope-a-dopes. Right now, we're kind of worried about offices. We've been worried about retail for a long time. We're not in any big retail other than the retail in the local towns we're in, all the real estate and the real town centers that are there. But the big box stuff we've been out of for years. It's just, you kind of saw it coming. C&I is doing very well for us. And so next one is our loan portfolio. Again, I won't bore you with this, but kind of see where we're how it works. And the niche portfolio is about a third with $9 billion. They're pretty good. Not bad. Started them all from scratch, basically. So you don't want to acquire our leasing companies. We started our leasing company, it cost about $5 million to get it going. Had to run through the income statement as opposed to through goodwill. But now they're over $2 billion in assets, doing a great job in terms of adding value to the organization. Next slide, please. You can see although our deposits are basically Chicago, our core market right now is any place you get to from O'Hare, basically in 2 hours by car, which takes you north Milwaukee, northwest Indiana. Our loan portfolio, however, because of the niche businesses, is more diverse than that. You can see how it's spread out through Canada all the way down to we're in we have exposure in every state, but so we're if you learn one thing is in banking and really in life is that concentrations kill. You have too much in one place, rely too much in one business, and that business goes sideways, you're gonna get your butt handed to you. So we believe in diversification in a way that will keep us safe from that in that regard. Our deposits, however, mostly all from Chicago and in our market area, which is okay. We'll have the ability someday to go to Michigan, Indiana, and just start spreading out like a pebble hit in the water. But right now, we're still concentrating on the local area. Next slide, please. You can look at all this later, but kind of give you an idea of what we're doing. Let's go to the end where we have the in the addendum. Credit, we're always very good on credit. It's by design. You keep going. Go to the appendix real quick. On the PPP front, I gotta tell you, we hit the cover off the ball. Because we were open, because our people were so dedicated. They were dedicated for one reason, not because they're wonderful human beings, or they're wonderful human beings, but they knew they were helping somebody with this, people whose businesses were going to fold, who needed a paycheck. I'll tell you, I have more emails from people telling me, thanking me for the help they got. People were, we call them back at 4 in the morning. Guys would work all night, all remotely, we're able to get, we really were on top of this thing. We're able to save a lot of jobs, a lot of businesses. At the same time, we're able to bring on a lot of our prospects, because the big banks just don't know what they were doing. They couldn't react. It's kind of like if you read a military history. Pardon me. In World War II, the Americans were always very nimble and were able to move around. They didn't have to wait for a structured order to come through to get anything done. That's kind of like how we were. And the Axis powers were all very, you have to get them from the top, and they have to wait for somebody to tell them what to do. Because of how we're structured, we were able to call and just get it all done, and take care of the clients. And we picked up 500 of our best prospects are now in the process of becoming clients, because we did a good job for them. And the big banks couldn't do it. So I think our structure is one that will is going to be the structure of community banking to come, that high touch, high tech, the melding of the high touch, high tech, and knowing your customer sort of stuff. Next slide, please. Circle stock price one is no fun, but I just want to show you, I said we run on change in assets, we get paid on change in assets, change in net book value, tangible book value, and earnings. You can see with our proxy peer group, 381 to 136, not bad. We're being on a total asset growth handling. And we can do either acquisitions or de novo. I mean, we know how to do, because of we're able to differentiate in a commoditized market, we're able to grow organically better than most. And it will do acquisitions as the time is, if they make sense and time is right. Next slide, please. And the book value, tangible book value per share, 180 compared to 101. We've beaten them since, forever. And then the next one is earnings. Earnings were 100 because of last year was so goofy, but this year will come back because we reversed that provision that came in. The whole world had to take these huge provisions that were never used. So kind of crazy stuff. I think I've yacked enough. I don't know if anyone's trying to cover, Leo, or do you want to just go right to questions? What do you want to do?
Yeah, thank you for that. I think we can move on to our question section. Let me just pull them up real quick. So just to start things off, I guess, you've been in the banking industry for quite some time. So what have been the greatest changes that you've seen in it?
The risks, though, as I said earlier, the risks don't change. They're always the same. It's you got government risk, you got credit risk, you got liquidity risk. Everybody forgets you need liquidity. Liquidity is having enough liquid assets on hand to handle deposits in the fact that you had a bad time and they had a run on the bank. It hasn't changed a lot. The biggest change in the bank industry are obviously technological. Between robots and everything you can do now, the bot technology is unbelievable, because you're able to do any sort of routine endeavor through a robot. They're better than people in a lot of ways too. They don't complain. They don't. But I think you all can see it between Zelle and how payments are transferred now, how you can do everything online. I think that's been the biggest change we've had in the banking industry. Everything else is pretty predictable. The actions are pretty predictable. Rates stay low a long time. Banks can't find earning assets. They do dumb things. That's what caused us going rope-a-dope last time. We don't see it yet, but we may have to do it this time. But in terms of the changes, it's all been really technology. And I think for the better. I think it's made payments are much more efficient right now. I remember the days of 14 pocket-proof machines and big reader sorters to move checks around. Now you do it just through the big reader sorter, but it all goes as photographs and works very well. I mean, you used to have 3-4 days wait for availability on check. Now you get it immediately. So I think there's been a lot of great moves, mostly in payment and money transfer abilities. But Technology's really been the biggest change you had. Other than that, really, on the lending side, still got to look at the basics. You're going to lend money to somebody, and those don't change a lot. That's why we don't change our loan policy a lot. So hope that answers your question.
Yeah, for sure. So I guess looking more towards the future, how do you expect the banking industry to change over the next, few years coming out of this COVID pandemic?
Well, it's going to be interesting in terms of people. I think that you're going to have to give people some flex time, but I really believe that you have to be in the office. Everybody say, "Oh, we don't need to be there." Well, you lose on culture, you lose on mentoring, you lose on everything like that. I think it's important that you're together. I mean, you're a young guy coming out. You want to be by people and learn from them, right? Not try to learn on a Zoom call or something. But more technological advances. I don't know if they're getting any faster. A lot of tinkering going on. I mean, LIBOR was always one of the base rates that you'd use. They decided you can't use LIBOR anymore. So now we got to go and spend millions of dollars changing everything from LIBOR to something close, which is probably going to be treasuries or treasury constant maturity indexes. They gave us a break. It was supposed to be next year, but now they got till 23, I think, to get that done. That's a big deal. You got billions of dollars based on LIBOR. LIBOR's going away. It stinks. I think that it'll be interesting to see. We build our branches now with the ability to flip them to non-personal if we had to. We're not building big ones anymore, mostly smaller ones. Because, what if we're wrong? What if I'm wrong? And people go, I don't need to see a bank anymore. I don't think that's going to be the case. I think, as I said, money is a more important commodity than a loaf of bread. You're going to want to know somebody, especially if you need something. You need a mortgage. It's easier if you know somebody and they can get it through for you, as opposed to calling up, getting somebody you've never met before, walking you through it, hand you out somebody. You know how you can play the telephone tag. It's so frustrating. You'd rather have somebody who knows what they're doing and knows you and can handle things right away with one phone call. So, but I don't know. What if nobody, you young guys don't like that anymore, and you don't care about people, and kind of hide in your house and not go out? That's one thing, but that could be an issue for us. But we have the ability to flip the switch really fast. But as I said, we're building well now with the ability to go to just straight technology in the banks itself. But you'd be surprised, even with COVID, as we reopen the branches, our teller transactions are actually up. A lot of it has to do with the growth. We grew $10 billion through that COVID period because of the way the halo effect we got, the way we handled it, and because there's a lot of money out there these days flopping around. But our teller transactions were up. If you have no place to go, like going to the bank, I think there's nowhere else to go. We'll see. But we do have that ability. But technology is going to continue to push. The Chimes of the world and the Dave Bank, and it seems very enticing to the young people. But eventually, you're going to want to know somebody in the bank who's going to take care of you, as opposed to not knowing somebody and moving like that. So that's my opinion, at least. But we're ready to flip flop if we have to. But I think the next few years is going to be the same. Regulations come and go, depending on who's in office. If you look at the last 4 years, regulations were light. They were still tough, but the regulators moved to more of a compatible sort of thing, as opposed to a gotcha, which they were in for the last 8 years. Before that, the gotcha mode doesn't do anybody any good, because you just get called on foot faults all the time for dumb stuff. It means nothing. But we'll see where Mr. Biden takes his. But I would imagine we'll go back into getting beat up again, and then you just got to go with the flow there and do what's right. But I think that the industry in the next few years will be interesting to see how the online banks work. what I think, I'll give you my prediction what'll happen, because I've seen it before. What'll happen is the online banks will be able to get deposits. So you have no place to put the money for the loan side. And we make money, we're taking, where we sell money, we take it in, that's our inventory and deposits, we lend it out. These online guys don't have a place to lend the money. So they put investments, I guess, but they won't make a lot of dough that way. So then they start doing dumb things. That's really, in the past, they've all turned into these subprime lenders, because they always go the same theory. Well, if I get enough of them, I'll make enough money to cover the losses. Well, it never works that way. It never has. And a lot, bad business. You keep building on it, you build on it, and it just gets worse and worse. So I have a feeling a lot of people go that route. But as I said, we have to be nimble and figure out what we're going to do going forward. I don't think the model will have to change that much, though.
Yeah, for sure. So you've kind of answered this, so we'll move on to the next one. Could you just provide like a brief overview of the sorts of careers that are available in the banking industry?
Yeah,
especially
sure,
going forward.
Sure. Let's bifurcate the banking industry, because you got the banking houses like Goldman, Morgan Stanley, and the like, who now are banks, but they're really not banks. They're investment banks. They concentrate more on making money in the markets and that sort of stuff. So, and there's always opportunities there than the investment banks. If you want to be a rented mule for a couple of years and get the heck, they work your tail off for a couple of years, and there's no loyalty in that business at all. You're like a piece of meat, but you will learn a lot. I think just as a career side, one piece of advice I give you, all of you coming out in the business world, is find out what you like and realize you're going to be a grunt for a couple of years, and it's going to take you time to go from book world to real world to figure out what's going on. It's your Marine Corps. It's your time in the service where you're going to have to figure out what's going on, and you're going to have to work your tail off to get there. But you got to do it, and you're better off for it. Especially you got nothing. You're that young. You got nothing else. So you just be in the bars anyhow. So what the heck? Careers available in the career, and so there's the investment banking side. There's the investment side you can get into as a young analyst. That's kind of fun. Realize that when the market's going well, though, you'll do great. Market raises all ships. Rising tide raises all ships. So everybody thinks they're really smart, and when it goes down, everybody goes down, and they all dump you like a hot potato. So you have to find your own little niche and make yourself valuable in those niches. On the community banking side, or like the commercial banking side, we do, there's plenty of opportunities there to come through it. You can come through on the retail side if you want, and work at a branch or a bank, and handle clients that way. The deposit side usually. We have an asset management operation. It's got about $40 billion in assets under administration. So we handle that also. You can come do that for us, be an analyst on that side. And a lot of the banks have those. We're one of the few banks left that offers a training program. We bring in about 40 to between 30 and 50, depending on what's going on. Young kids in our credit analyst program, and take them through training for 2 years. It's a very popular program. We're going out of our way to make it a diverse program for sure. Hang on 1 second while I get rid of this. So the landline, that's all I am. But a credit analyst side, you get on the lending side of things. And the fun thing about banking, it's like the fun thing about accounting, is if you get in the commercial lending side, we probably end up with about 25 to 30% of the kids stay with us after a period of time. We'll lose 70%, but that's okay, because they'll go with a private equity firm, or they'll go with a company. But you get to see a bunch of businesses, learn what you like and what you don't like. Like I did in accounting, I didn't like manufacturing. I didn't like it. Distribution was okay. I really like banking, and that's how I acclimated to it. It's the same thing if you're working at a commercial bank. and you really want banking, you get to sit there and see a bunch of different businesses, find out what you like, and go after it and hang in there. The other thing you got to do is in your careers going forward is don't have you're young, you're brash, you're all smart. You want to you only woulda, coulda, shouldas. I mean, if I was scared to hell. I was 37 years old, had 5 kids when I started Wintrust, and did a lot of dough in the bank. It was scary, but fear is a great motivator. But I would have killed myself if I didn't do it. There's a little poem I remember that I always use when I get scared. Somebody scout who will never do that, at least no one ever has done it. So he took off his coat, he took off his hat. The first thing he knew he'd be gone. Lift his chin, bit of a grin, I died or quit it. Started singing the tackle thing that couldn't be done, and he did it. So you don't want to look back and say I should have done this or should have done that. Learn what you can, figure out what you really like, make your passion, and make it happen. That's what you got to do. But there are a lot of careers available out there in the financial industry. It just depends on the path you take.
Okay, sounds good. So I think we're running a little short on time, so we'll skip these next 2 questions. But one of the questions we like to ask all of our speakers is for book recommendations. So what is your favorite book, you say?
Wow, my favorite book? My favorite book is actually the book The Match, about golf. I haven't read it, it's pretty cool. I don't read a lot of the self-help stuff. I get a lot of it in the mail. I think I get if I haven't figured out how to do it yet, I'm not going to change the way I do stuff. You know, I'm an old dog, and you can't teach me new tricks. But I think I read. What I read in the morning, I read the Wall Street Journal, I read the Tribune and Sun-Times Sports, and I read the New York Times. Somewhere in between the whole thing, I'll get the news and anything else I need to know. I can, you can look it up right now. You can find anything you need to know right away. And for reading, I come home and read fun books. I don't have to read a self-help book or something like that. I read dumb mysteries and stuff like that, just to kind of come down. And I always have 2 books going right now. It's the name of it. It's Gray Man does something. I forget that he's some sort of spy. And book 10, I'm on book 10 of his books, and I just like to come down and forget about stuff and when I read. But I always get the self-help books from everybody under the sun and put in my library so I look like I'm really important, but I don't read a lot of them.
Yeah, that makes sense. So we have a couple of questions that members wanted to ask, so we'll try to get through those. We might go a few minutes over. My apologies. But Cole, do you want to get us started?
Yeah, hi. My name is Cole. I'm a junior at Jones College Prep in Chicago. I just had a question about starting a founding team. So do you have any advice on building a team of founders for a business and maintaining those connections as you continue to build over the years?
Yeah. To get the original 11 people to come work with me, it's kind of like having Tom. I felt like Tom Sawyer saying, "Come help paint my fence, guys. It'd really be a lot of fun." And they had to go raise capital, but we were lucky that we were able to. People liked the idea that I was going to work, and we were, when you say about your fellow founders, it's really we base on shareholders. The 4 pillars of our business have always been shareholders, customers, employees, and communities that we serve. If you can take care of all 4 of those, you're going to be fine, because you can't live without one of them. I mean, I have a community to serve, I want to have a bank. I have customers, I have a bank. The shareholders want to have a bank. The employees want to have a bank. You got to have them all together to make it work. So I think all I tell you is pick a good group. If you're shareholders, you got to make them money, but they have to understand going in what your plan is, and never lie to them, never deceive them, never, just be honest with them. It is what it is. Tell them what's going on, and go from there. But you start lying, you get caught in your own. It just doesn't work, and you get caught, and you reputation, and then nobody will lend you money or give you money anyhow. Just gotta be honest with everything that's going on. Honest with yourself, honest with your people. Tell them the truth, and most of them will respond. But I'll tell you, the 11 people we start with, there's still 1, 2, 3, 4 of us still here. And the guys with the beer and the cigars, they had to wait to hire them until later because they can't afford. They say still can't afford them, but with 11 people, start with nothing. But so we got bigger. They both came on. One opened the Hinsdale Bank for us. The other is Dave Dykstra, who's our chief operating officer. Has been with me for a long time. But it's all, you just get people to buy in to what you're doing, be honest with them, and good things should happen.
Thank you.
And Jenna, do you want to go ahead?
Sure. Yeah. Hi. I'm Jenna. I'm also a junior at Jones College Prep, and a question that I have is, what's a piece of advice that you have now that you wish you knew or had when you were first starting out in the financial industry?
What are you doing, Ed? Piece of advice I wish I had had back then. I guess I'm constantly surprised by people who, I guess, we trust yet verify would be the piece of advice. In other words, somebody for a long period of time. You're a community banker, you open it up and you're like, it's like you're the financial confessor of the world. The people come in and tell you, I need this or that, but it's amazing how people who you thought one way would act one way, act a different way. And when it comes to money and survival and the honor of it all, and they'll lie to you to your face. And it can be very disheartening in that regard. So be friendly with everybody, but trust yet verify would be, is what I would say.
Thank you.
And Al, do you want to go ahead?
Yep. My name's Alp, and I'm a junior as well. And my question was, as a leader, what methods were you able to implement to maintain the culture as Wintrust expanded?
Yeah, that's a heck of a question, because that's been our biggest fear is how do you do that? I think our structure is by keeping it small. We're big now. We're the 50th, 45th or some biggest bank in the country now. Who would have thought that back when I had the big phone? But I think what you got, because we operate with 15 charters, really about 25 operating companies here, and those charters all have their own brand. So everybody gets it, but you have to give the people the ability to actually deliver. What you want them to do is, big bank, I'll just juxtapose it. Big banks give their people, here's your manual, and they really entice you to say no to a customer. We do the other way, we entice you to say yes. We beat culture all the time, beat into our customers, all our employees all the time. And because we're small enough, people, actually anybody in the joint can move the needle. That's what we like, because you say you're Libertyville Bank or Deerfield Bank, and it's a smaller one, but you can do a deal and move the needle. You take care of a customer, move the needle. But you give the people the responsibility, and you put guardrails up, give them their expectations, and let them go. They will maintain that culture for you. You have the good guardrails up for them. But it gets harder. But I think I said that last year was our finest hour through COVID and all the businesses we kept. We kept thousands of businesses in business with the PPP loans. That meant a lot to our people. I was really proud of our staff, but they were able to do that. And it just shows that the culture still is there and it works. it's got to be leaders who do it, and you have to have the right leaders through the organization as you cascade down who buy into it, and you have to just all the time reinforce it. But you got to do it with your actions, not your words. You got to walk the walk, as they say. All the beauties of our organization is you go into the Pilsen neighborhood. We have a branch in Pilsen. Our people are very involved in the neighborhood. They actually get involved, and they like that. And from Lake Forest has different needs, and Pilsen has different needs, and Oak Park that has different needs than the other places we got in the city. Our people get involved. They're from those areas. They understand them. They know it, and they want to help. That's the important thing. And just have to reinforce it all the time. And even though you're big, you got to stay and think small. I hope that answers your question.
Yeah, thank you so much.
Where you at school?
University of Chicago Lab Schools.
Oh boy. Good luck.
Thank you.
And then we just have two more. Andrew, do you want to go ahead?
Hi, my name is Andrew. I'm a freshman at Walter Payton. So I remember you saying that you started your original bank up with limited capital. So what did you do to kind of overcome that? And so what were the most influential things that you and others did to overcome that limited capital?
Well, we had to perform. We were the fastest growing de novo ever. And then we started number 2 in Hinsdale. That was faster than Lake Forest. 3, North Shore was much faster. So I was raising capital for Hinsdale's first. We raised 6.6 for Lake Forest. I raised 10 something for Hinsdale, 18 for North Shore, Wilmette. At the same time, back on raising more capital for Lake Forest and Hinsdale. If we open a new one, I'd have to go back and do. So first capital raise was 1. We did Hinsdale. I was doing 2, 1 for Lake Forest, 1 for Hinsdale. Third bank was 1 for North Shore, 2 for Hinsdale, 3rd for Lake Forest. So success breeded success there. In other words, people, they were so, the change in banking when Northern Trust or Harris bought the local community bank, kicked everybody out, made them be, automatons basically. Couldn't make any decisions. They all had to go downtown. People got really mad at that. So we hit the wave correctly. And we were able to show people that it worked. And we were profitable like Forest in month 14, which is helpful. Property and profitable in Hinsdale in month 12 or 12, I think. We were making money in a year, basically, and then it got faster and faster. So people kind of wanted to get out. It became kind of an in thing to do. But, capital, you got to raise it. I mean, there's earn it or raise it. And in banking, you got to keep out. You got to use the old days. You kept about 7% common equity. I keep about 10% common equity. They raised that since 08. So as you grow, you either have to self-support or raise the money. And so what I just do breakfast, do lunches, do dinner, and raise money. That's what I did basically for 4 or 5 years until we became public. Our public offering is kind of interesting. We did a subscription offering, started with because we're taking these local banks where we accumulated really great boards of directors and said, all right, we're coming into one holding company. They're like, oh, no, we don't want that. You used to be a big bank. So, no. We'll all be, you're going to keep your bank boards and then the holding company boards had a representative of each bank on it. So once we were public, we were able to raise capital a lot easier. But now, instead of having a lot of local people in there, we're probably 98% institutionally owned. So all the big guys own us now. We're big enough that we kind of lost that flavor.
Thank you.
Welcome. And one final one from Pranat. So you want to go ahead?
Yeah, hi, I'm Pranat. I go to Mattia Valley High School. It's around Chicago. I was just curious about how the business cycle in general affects the jobs in the banking industry, and if there are any careers in the banking industry that are immune to the business cycle.
Yeah. Well, depending when you talk about commercial banking, like guys our size, you don't have, it's really kind of build and grow. As you keep building and growing, you're okay. And it's, a job standpoint is probably more secure. You get into the investment banking or the money management stuff, not as secure because you're low guy in the totem pole until you can work your way up and show some real value. You're just a hunk of meat to these guys. So my advice would be to just find what you like and do it, and don't listen to anybody else. Just do your job and move ahead. Do the right thing, and good things will happen. But people, especially, I don't like to say this, but young people these days don't seem to value a career. They'll switch jobs for $1,000, and eventually that'll catch up with you. I think that having a career, you don't see many people who had one job in their whole life or two jobs anymore. I think it's important to have a career. Once you find what you like, stick with it and move ahead with it, and make sure that a career is very, very valuable. You don't just switch jobs for $1,000 because you might go someplace you might not like it. Then what are you going to do? And your resume looks bad. You build loyalty. You can build all sorts of things there. So my advice would be, think about a career. Switch a couple jobs because you're not going to know what you like. But once you find what you like, stick with it. And I will end by saying, guys, the only way to really make money is to do something on your own. I mean, you can live a comfortable life in banking, but you want to make a lot of dough if that's your goal in life. You'll end up doing something on your own with a group of people, whatever. You never want to look back and say woulda, coulda, shoulda on that. If you got a chance, it makes sense. If you find a real need, you should make a run at it. And I always thought that banking was one that you ever see a Hello Dolly? You ever see the movie Hello Dolly? The guy who runs the hardware store. Because you want to be rich, you give people something they need every week. Be really rich, you give them something they need every day. Everybody needs money. That's how I got into. But they need food, money. There's so many different things you can do. You just got to find what you like and make a run at it and go from there.
Yeah, for sure. So I think thank you for all of your presentation and your responses to those questions. I'll pass it off to Lizzie with some concluding thoughts.
Thanks, Leo.
Yeah, thank you, Mr. Wehmer, for speaking to all of us today. I think we really learned a lot about your career and about Wintrust and how you've grown, and just the importance of sticking to your values and maintaining integrity throughout your career. So I think that's really important advice for us to keep in mind as we continue throughout college and as we enter the workforce. So we have a couple upcoming opportunities. So we have Wall Street prep courses that members will be getting in the next week or two to complete. We also have a number of community initiatives going on our website. So if you'd like to sign up, we're building websites for Chicago Public Schools. There's also some national competitions we're working on promoting with the Council for Economic Education. So we'll send more information about the National Economics Challenge and National Personal Finance Challenge after today's event. But to stay updated on more opportunities, you can follow us on Instagram at JEC Chicago or on LinkedIn at Junior Economic Club of Chicago. So thank you all for coming today. And I hope you have a great rest of your weekend.
Thanks, guys. If I do anything for you, just call me up. I still answer my phone. Take care now.
Okay, thank you.
Thank you.